Good morning, everyone. This is Geeta Raju. Uh, Today, we shall discuss about the subject investment management. What is there under the first model? So, under the investment management, there are five models will be there under your syllabus. The first model will be about the introduction, about the investment, the meaning, and what will be the investment avenues, and what are the financial information will be there about the investment, and the elements of investments, measurement, rate of returns, and the risk analysis, how to select investments, securities, and the fundamental and technical analysis of investments are there under the first model. Second model deals with the efficient market theory. There are so many theories are going to be prepared by the many of the author in regarded how there is a investment activities are going to be done to get the more and more returns to avoid the reduction of risk, how there is a effective investment activities will be done. For that, how there is analysis will be done, that will be based on the some of the theoretical aspects. So those are prepared with the some of the efficient market theory author. So those all we can be discussed under the second model. Random walk theory will be there, and there is a hypothesis theory of efficient market will be there. So these all the things are going to be making the discussion about fundamental and technical analysis about the investment. Third model will be portfolio analysis and management. Making investment only under the one securities are going to be always considered as a risk. So that making investment in the more than one security, how that investments will be done with the effective returns and the reduced risk, that will be discussed under the portfolio analysis and management. So about the diversification and the effects of combining securities, how there is a the investments will be brings out with the higher rate of return with the portfolio. These all the things we are going to be discussing along with the some of the frontier efficiency frontier, some of the models, index models. Then the fourth model will be about the capital asset pricing. Capital asset pricing model will be considered as having it some of the assumption. There are so many theories are to be prepared to make the investment activities. So securities markets are going to be having their particular consideration of some assumption. So that will be come across under this fourth model study. And there is a portfolio performance, the measurement of portfolio performance, how there is a risk and returns are going to be adjusted under the performance measure of investments. So there are some of the models will be prepared like as a Sharpe model, then there is a Jensen and Pharma model will be there. These all the things we are discussing about the fifth model. This is about your the syllabus for your this semester under the investment management subject. Today we shall discuss about the brief introduction about the investment management. The subject is going to be consisted with the two words investment and management. The management means already you have been known that there is a making, planning, the organizing, directing. These all the things are involved under the management. And we shall know that what is the meaning of investment will be there. Investment is defined as a sacrifice made now to obtain a return later. It is current consumption that is sacrificed. The investment is nothing but what you are going to be holding the financial things. Those financial things you can make it use for your consumption, or you can make it sacrifice of such financial resources for the future period, for the earning of some of the returns for the future period. So which is the thing of sacrifice you have been done, so that thing is going to be making it consideration or making it employment to earn the profit in the future period. So that will be known as a investment. So when you are going to be having the purchase of any of the commodity, so that is going to be giving you some of the sacrifice so of your need, but the investment will be considered as consumption is going to be sacrificed, because for making it obtaining of some of the returns in the later period or in the future period, to earn the profit, to earn the returns in the future period, to get the some of the achievement of the additional income in the future period, or having the additional growth in the value which you are holding now, is going to be having its employment of some of the money. Such employment of money is going to be considered in the name of investment. So as in such a manner, investment is going to be defined as investment is the employment of funds with the aim of achieving additional income or growth in the value. If you are holding with the sum of the money now, if you are going to be making it employment of such a fund in the particular things, so that will be making you achievement of additional income or the growth of value in the future period. So for example, if you are going to be having the 100 rupees now, if you are having the 100 rupees, if you are going to be purchasing any commodity, means that will be the consumption. If that consumption has been sacrificed, that 100 rupees consumption has been sacrificed, instead of purchasing commodity, if you are going to be making it employment of fund in the any of the securities or any of the shares or the any of the debenture, at that time you have been made the sacrifice of consumption. Through that you are going to be making the employment of fund. So that sacrifice will be making you obtain of some of the return in the future period, because on your shares and securities you will be earning of the dividend in the future period, some of the interest in the future period. That return, which is the additional income for the growth of value, will be bringing for your employment fund. That is called as a investment. If you have invested 100 rupees today, may you are going to be earning the dividend in the future period with a 100 plus, means the growth in the income will be additional for your employed fund. So that is called as a investment. As under the investment, we can be considered as there is a expectation of return is an essential element of investment. Whenever you are going to be making the consumption sacrifice, you are going to be employing the fund into the some of the things. So that employment of fund is going to be always expected with the some of the returns. There is a essential thing we can consider under the investment is you are going to be expecting the return. With the expectation of return only you are going to be making your sacrifice of consumption. So that is only called as a investment. So there is a some of the donations will be there. If you are going to be employing the fund for the any poor people, so then that will be not expecting with any returns. So that is not called as a investment. So as in related, the investment is going to be essentially included with the expectation of returns in the future period. And there is a commitment of funds made in the expectation of some positive rate of return. Always you are going to be making your sacrifice for the consumption with the commitment of your fund should be having the earning of the returns in the positive manner, not in the negative manner. For example, if you have been investing 100 rupees in the shares, you are expecting more than 100 only, means it is a positive returns are going to be expected under your employed fund. That commitment of fund we can be find out under the investment. So there is a meaning or definition of investment will be make us to understand that investment is going to be making the employment of the funds for the expectation of the essential rate of return in the future period. When we are going to be seeing the investment activities are going to be done with the sum of the forms. Under those two forms we can be find out. You can make your investment activities under the real investment, which are going to be like as a purchase of land or the machinery will be done, or there is a some of the financial investments are also there. Those are going to be purchase of a paper contract. So meanwhile, mainly there is a financial investments are going to be having their deals of in related with the financial instruments. So before going to know about the investment management, we shall discuss what will be the objectives are going to be there under the investment. So the investments are going to be having the objectives of maximization of return, minimization of risk, capital appreciation and tax consideration. When you are having the sum of the monetary things, so meanwhile you would like to make the consumption or you would like to make it employment in employment of such a fund into the financial instrument. So meanwhile when you are going to be having the employment of fund, definitely you are going to be having the expectation of maximization of return. So that will be the main first objective, primary objective of the investment. If you are putting any money into any of the activities, so that you are going to be expecting with the maximization of returns. So that is the first objective. For example, if you are investing 1000 rupees in the any of the shares and securities, you are going to be expected with the sum of the rate of return on such a 1000 rupees. So that is a maximization, means your 1000 rupees should be needed to make it increased income. Growth of value of your 1000 rupees should be done. So that will be the main objective why there is an investment will be done. So that is the first objective. Then the minimization of risk. Under the investment always you are going to be expecting with the rate of return will be high and the rate of risk will be at a lower manner. So why there is an investment management will be the subject has been occurred, because there is the analysis will be done where you can make employment of your fund with having the higher rate of return and with having the lower rate of risk, because the future is uncertain. Investment always it is going to be depends on the future. So under the uncertainty, how you can be earning your returns without facing the higher rate of risk, with having the lower level of risk. So that will be the main objective they are going to be considering. There is a risk will be there in all the future period. For even though under such a future period, how you are going to be conducting of your employment of fund with making reduces of risk, that will be the main objective they are going to be considering under the investment. And the capital appreciation, when you are having your employment of fund, so always you would like to have the more than that as a return, as more than that when you are going to be selling off such a type of the investment. So meanwhile capital should be which you have been employed, that should be having its enhancement. So for example, if you have purchased any of the securities today at the rate of 100 rupees, in the market its capital should be having its appreciation, as your market value of such a share should be having it in the increased level. Such a expectations will be there under the investment. That is also the one of the other objective. If you are having your investment activities, always you are going to be expected with the capital should be appreciated. The market value of your shares purchased should be more than 100 rupees. So then only your investments are going to be bringing you capital appreciation. Such a objective are going to be also considered under the investment. And the tax consideration, the employment of the fund is going to be brings you about the some of the benefits under the tax. So the investments are going to be making the incurring of the income, or investments are going to be making you earning of some of the return. So as that returns are going to be need not to having the liability of the tax. Again, if you are going to be having the liability of tax on such a return, you will be having the tax burden. For that reason, you need to have the investment activities where there is some tax considerations will be there. So then that will be brings you the higher rate of return. So that is considered as another objective of the investment. With considering of these all the objective, investments are going to be there by the investor. So meanwhile, the main features of the investments are going to be considered as in these 4 points. The one will be the risk, the return, safety and liquidity. Investments are going to be always expectation with in the future. Expectation in the future means it is uncertainty. The risk means it is also uncertainty. So in the sense, in the future period, what is the uncertainties will be there, those are going to be already it has been expected. So such a factor is going to be more considered under the investment, because uncertainties are going to be needed to find out as before you are going to be making your employment of fund. So then only you can be having the particular rate of return which you are going to be having it expectation. For that reason, all the investments are going to be having the risk, either it is a higher or it is a lower. Then the other feature of the investment will be there, when you are making your sacrifice of the consumption, always you would like to have the expectation as like a return. If your employment of fund is going to be not bringing you any returns, so then you are not ready to make the investment activity. So that always the employment of your fund is going to be having the commitment of having the sum of the rate of return under your investment. So that is also the other feature. Rate of return should be, the returns are going to be needed to must and should under the investment. Then the third one will be the safety. The investments are going to be always comes under the safety, because your employing of your fund is going to be needed to give the some guarantees in regarded with your earning of income. So as such a safety or the securities are going to be needed to consider under the investment. If your employment of fund is going to be having the higher rate of risk, there is a no guaranteed incomes will be there, means it will be considered as a very much risky. For that reason, the guaranteed things are going to be also needed to consider as a safety manner under the investment. Then there is a liquidity. The investments are going to be considered as to be having the higher rate of liquidity. So under the forms of investment, we have seen there is some of the real forms of investments will be there and the financial investments will be there. Among those, financial investments are going to be having the higher rate of liquidity. Liquidity means which can easily make it sell in the market. So such a things we can find out under the financial investment. That is also the other feature we can find out under the investment. So now we can see that there is a one more word will be there under the financial sector as like a speculation. So that normally when we are going to be considering investment and the speculation will be there under the same financial field. But even though investment is not same as a speculation, there is some differences will be there with the investment and the speculation. So like there is a risk considering with some of the factor like as a risk, capital gain and the time. So we can make the differentiation between the investment and speculation. Normally risk will be involved in the investment, either loss or the profit or the lower profit than the expected will be there. But there is a speculation is a baseless guess and may result in a very high profit or high loss. The risk in case of speculation is very high. Under the speculation, there is a speculator is the person who is going to be expected as the future falling down of the price, or there is a future increase in the high prices are going to be expected, so that he is purchasing or he is making investment in the huge quantity of financial securities. But under the investment, it is not involved such a thing. Either you can get the profit or you can get the loss, and that will be to the extent of only to the lower level. It is not going to be having it a higher rate of risk. But under the speculation, there is a higher rate of risk will be find out. Then there is a capital gain. Under the motive of investment, achievement of appreciation will be there. When there is a achievement of appreciation, we can be find out under the investment will be as a encouragement to make conduct of your further investment activities, or the capital appreciation will be going on under the investment. But under the speculation, motive of speculation is achievement of profit through the price changes. Here there is a speculation will be purely depend on how the market prices will be going on change. When there is a speculation, you get the profit. When there is a price changes will be going on. But investments are getting appreciation as in the motive manner, that will be going on under the market as a common manner. But speculative will be having its profit only when there is a price changes will be going on. Then there is a time factor. Considering the time factor, if securities are purchased and investor does not expect an immediate return on it and waits for long-term benefit, it is termed as an investment. When there is a securities are going to be purchased and they are not expect with any immediate return, they would like to hold it for the long term for making earning of benefit in the future period. That is called as a investment. But the same securities are going to be the person expect immediate returns on his investment and dispose of it in short period, it is known as a speculation. Speculation is nothing but the making huge investment activities only for the short period. With having the price changes, he will be making the earning of the profit. So for example, if the speculator is going to be expected in the today's market, there is the some of the securities prices are going to be falling down, so that in the in the previous market only he is going to be selling all the securities which he is going to be holding, because today he can make it purchase in the lower level prices. in the next day he is going to be sell it in the higher prices. So such a things of marketing things will be going on under the speculator, that is known as a investments are going to be having its selling activities with a shorter period. So this is about how there is a investment meaning, and there is a investment versus the speculation will be there. In the next class we can discuss about the investment, some of the avenues, and also investment management meaning. Thank you.